Richard, let's start with you then. What have regulators been doing here in this whack-a-mole effort to keep commodity prices, asset prices, real estate prices under control?
Yeah, I mean, as Dave was just mentioning, particularly when it comes to the commodities market, that has been the greatest, I think, area of concern for them. The fear is that the rising commodity prices, whether it's corn, metals, will feed into consumer prices. Ultimately, we've seen them at the factory gate level, not yet into consumer prices, and that will ultimately pressure the central bank to raise interest rates. They've been resisting that at the macro level, but instead trying to target very specific asset bubbles. And commodities have really been the greater focus. But as you mentioned, there's also been concern about real estate. We've seen weird surges in stock market driven by record inflows. So there's a lot going on. A lot of that is down to trapped money within China due to capital controls, but also money coming in thanks to the trillions of dollars being pumped into the global financial system by the Fed.
Yeah, and I guess, Richard, the next question would then be, does it seem that we will move from targeted to more broad sort of tightening here? Do we get to the earlier point? Do we get a rate hike? Do we get something more in credit growth, that sort of thing?
They've definitely been resisting that. They said, near the start of the year, they wanted no sharp turn. They were going to tighten, but gradually. And they're still concerned about the sustainability of the economic rebound in the wake of the pandemic. So they have been keeping things accommodative, and that's not too dissimilar from what we're seeing in, say, the US or Europe, where the central bank officials there are saying these spikes in inflation are temporary and they don't expect to increase interest rates. But in China, of course, they have their own problems because capital can't really flow out. So it can't just go somewhere else. And increasingly more and more is going in, and that's why the whack-a-mole analogy comes in, because wherever they hit is going to pop up somewhere else. But at the moment, commodities seems very obdurate.
Yeah, and let's focus in on soft commodities now with Jason and bring you into this conversation. Jason, walk us through what China's demand is looking like for soft commodities and what steps they've been taking to ensure that prices don't run out of control.
Yeah, I mean, for agricultural commodities, the fundamental problem for China is that it just needs to import huge quantities because of a domestic shortfall. And I think what you've seen in reports overnight, you've seen that there have been some cancellations of US corn cargoes that have headed into free trade zones, which are a little bit more unregulated than other parts of the economy. And there could be a sense here that China is worried that the import need is kind of spinning out of control. As likely, I think, is the idea perhaps that this is yet another example of maybe a negotiating tactic, because ultimately China needs vast quantities of US corn, irrespective of the fact that it happens to have cancelled some cargoes right at this moment.
And Jason, I'm wondering then if you could then clarify for us, around mid-afternoon yesterday, and this report out of Reuters was then clarified by another report from another media outlet, what's going on when it comes to commodities products at these banks? Is there or is there not some order coming down from the top asking these banks to stop issuing these products? What do we know?
Yeah, I mean, it's unclear, isn't it, whether the report that we had yesterday is actually a continuation of the crackdown that we saw last year, when you had this extraordinary circumstance where you'll recall that crude oil futures actually went into negative territory in the US. That was the WTI contract, and that caused a complete collapse in some of these retail investment products. Wiping out savings, and in some cases, investors actually owed banks money. So China has been alive to, the problems that, say, relatively unsophisticated investors may face with retail products that are being pushed by the banks in commodity markets. And it may well be that what we're seeing in the reports yesterday was just simply a continuation of that. But clearly, China is very alive to the risks around commodities for the wider economy.